Hi. Oil continues to fall further. The US oil is now less than $44 a barrel. Brent crude is hovering around $54. I remember just about a month back, I had mentioned that the rise in oil prices, Brent crude, if you recollect, had gone up to $63, would not continue for long. I had mentioned clearly, and you can go back to any of my presentations, I was probably the only person who had pointed out that oil will resume its decline, and so it has. All over the world, you found fund managers, commentators talking that the oil had found its bottom and from here on it would continue to rise. I clearly mentioned that I expected that oil would continue to fall below $40 below before it finds its bottom somewhere around June of 2015. The same story is unfolding. I'd also mentioned that I was very negative on global stock markets and they would decline substantially after February 28, which has also happened. Now, you find a leading fund manager talking today that it is probably time to get out of defensives in emerging economies such as India and into aggressive stocks. I completely disagree. You have to understand that the US Federal Reserve is about to start raising interest rates in the United States. As soon as this starts happening, the cost of funds all over the world will start going up. And whenever that happens, infrastructure projects, which are rather capital intensive in nature, will start declining. Another thing that needs to be kept in mind is that all over the world, you find there are ripple effects of a very strong US dollar. But for the pound sterling, which has withstood the rise in the almighty dollar, you find most currencies have fallen. Now, this may be good for other economies because it helps them in their exports. A weaker currency is always helpful to any country in terms of exporting more. It, however, has its drawbacks as well. Now, as you know, American economy is rather resilient in terms of the fact it's not so much dependent on exports. It has also got a very strong internal economy, unlike an economy like China, which is so much dependent on exports. So, even as the US dollar continues to rise, the American economy will not be impacted much. But there are certain things which are happening in the world which will have a ripple effect all over. For example, there are almost $46 billion plus of redemptions in US mutual funds which have taken place in this year itself. And over $37 billion has gone into countries into the European continent. Why? Because of the quantitative easing that was announced by the European Central Bank, all this money has gone over there. Now, as this money is employed in the European subcontinent by the fund managers, there's going to be a problem that is going to arise. After you convert the money back into US dollars, you are going to start recognizing losses. Do not forget the fact that the euro is nearing its parity level. It's almost at an all-time low. This would discourage more money going into the European continent and it would cause a reversal of money back into United States. This is going to have a ripple effect in various capital markets, which you need to understand. Also, do not forget the fact that there is another conundrum that is arising. Now, last year, in the last 6 months of 2014, you found that the dollar started rising quite heftily. That was because oil started falling. Do not forget the fact that oil and the US dollar are inversely correlated with each other. That means when one falls, the other rises, and vice versa. In this year, the oil did not fall so much in the first quarter of this year. However, oil has started falling just recently, quite dramatically. It was holding steady in the month of February. However, dollar continues to rise. That means this correlation or inverse correlation between the oil and the US dollar is also beginning to get impacted. And that correlation does not seem to be holding firm ground in this year. There are a lot of anomalies such as similar, but in general, a rise in the US dollar would be helpful to the American economy. It strengthens the economy, and an economy which is not so much dependent on exports for its well-being. However, the very fact that the rise in the US dollar could have ripple effects on other economies, other countries, and could cause a reversal of flow back into the United States is reason enough to be negative on global stock markets. Hope you take that into consideration as I see a lot of turbulence and downturn in global stock markets in the near term. Happy investing. Take care. Bye bye.